morning, everybody. This is Dave Fry, ETF Digest with an ETF in focus. We're looking today at FXI, the iShares Large Cap China ETF. This is a monthly chart. And the monthly chart is instructive for those investors who had wanted to have exposure to China over a long period of time. This monthly chart takes us all the way back to the low, LO, which is one of our proprietary indicators. And you can see that this occurred in February 2009. Which called a low for many markets. Then we rallied up over the month now to a high which marked really a long-term top in FXI in November of 2009. And since that period of time, the point being, long-term buy and hold investors had not made any money in FXI over the last 4 years. And that's pretty amazing because it's seductive to be involved with one of the world's fastest growing economies, but it hasn't paid off. Shortening the view up, we can look at the weekly chart. And you can see we have 5 and 10 period moving averages and proprietary MACD histogram moving average, relative strength, and money flow. Obviously, we look at the money flow down here and you can see it's quite negative. We did get an HI here, or previously even better, looking back for traders anyway, intermediate term traders, you can see that our HI indicator was effective back in February of 2013 on this weekly chart, and we did have a low that called a bottom here on the week of April 12th, 2013, and then another high HI recorded here on September 20th, 2013, and then some sideways action, a brief spike in prices, and then a collapse once again, and we can see that here in February 2014 with a low recorded, and then a counter trend rally here, an oversold rally really, to this point where we now see us heading south once again and making new lows for this move, which may take us back to the lows recorded back in June of 2013, challenging those. And what's going on in China is a lot of negative economic data taking place, and also even more importantly, our credit defaults. There are 13 trillion, at least there was at last count, corporate bonds outstanding in China. We just experienced our first default on that just last week, and China, which had bailed out corporations previously, decided not to do that, and Mr. Li said, who's the finance minister, said, well, these defaults are unavoidable and tolerable, and he also noted that economic data in China would continue to be slow, but is something that they can endure, but maybe you can't endure for the next year. Therefore, we see another decline taking place in China, the world's second largest economy. That's it. If you'd like to see more of our detailed charts with actionable alerts, sign up and become a premium member at the ETF Digest. And thanks for watching.